Arthur is another level of finance, a different level of finance to the ones that we've heard of already. It's state manager for pretty much everywhere in Australia except for maybe one or two states, running the show for Cashflow Finance and the Classic Funding Group. Welcome, Arthur, and I'll let you talk about how you come into the picture, helping businesses navigate their way through this COVID-impacted environment.
Absolutely. Thanks for the introduction there. And yeah, as you said, Arthur from Cashflow Finance, thanks for joining us today. From our perspective, I guess we want to just add that extra layer of opportunity to businesses that might have that need as we emerge out of the current environment. And I guess what I'd like to cover quickly today, I think we've touched on a number of these things, but obviously the current environment and everything that's happening there, and I guess how we might be able to support your clients now and into the future using one of our products and what we can actually offer into the mix, and how that works. We might talk a bit quickly about the customer spotlight and what is our appetite, and I guess even the industry for that matter, and some quick tips on pitching what we can offer to clients, because we understand that quite often it's difficult for everyone to understand how this all works. So, and then again, looking ahead. So, just the next slide, if you like, Shane. So, there we go. So I guess some of the key things that we're talking about is the elements that we see going through and the challenges that SME businesses are going to face. They're going to have to work on their survival and what they need to do. As we know, there's a number of business, the zombie businesses that we've heard about, and we've got a number that are thriving. How are they going to become sustainable and go on beyond the stimulus? And is the stimulus enough? The other question is, once that happens, we all know that one of the biggest and most important things for businesses is for access to capital, and where's that going to come from? And I guess that's where businesses like ours and also Stevens, where we're able to inject some of that much needed capital into businesses going forward. The other thing that's been touched on already today is keeping up with legislation and all the changes and all that touched on the tax issues that are going to arise moving forward. And last but not least, I think it's also important that we've got to remain optimistic and be resilient. So next slide, thanks, Shane. I guess the focus for different SMEs is going to be different depending on the sectors that they're actually in. Obviously, we heard a lot about retail earlier from Tony, and as well as hospitality and tourism and where they're at. But obviously, there's a lot going on in the education, mining, and manufacturing. How are we going to manage our customers, and what have our clients and customers got in place? What have your clients got in place in order to be able to adapt quickly? And talking about changes for staff, and I guess we're going to look at a marketplace where you're going to see that the way that people work is going to become a lot more from home. Tony mentioned earlier about restaurants and the restaurateurs moving into industrial places rather than going back to traditional restauranting. And what type of work conditions are we going to all face, and how are they going to manage cost management? One very important thing for all of that to come together and to assist with that is their working capital, and I guess that's where we certainly can offer. And debtor finance, coupled with trade finance, I think even equipment finance can play a big part of that. That's certainly something we've got on offer and very keen to talk about and perhaps put into the mix and give you a bit more appreciation of exactly what that means and how you can leverage some of the working capital assets in the business, so that we can help people transition out of the current environment that they're facing and beyond. The next slide, if you like. So what is our appetite? Debtor finance is a product along with that utilises the receivables ledgers in businesses to provide working capital. And I guess trade speaks for itself. We're able to do both domestic and overseas trade, so it's not locked into just being a trade from other countries to bring in goods from overseas. And obviously equipment finance, so you can fund equipment both in the business and also any new purchases that are going to be required for all the infrastructure projects, etc. Our appetite is quite broad, and certainly our sector outside the traditional banking sector is one of which we're able to look at businesses on the merit, on how they're tracking right now, and perhaps what we think is going to happen during this period as they transition through the COVID experience and beyond, that what it may mean for them going forward. So it's all business of all shapes and sizes that can generate an invoice and is waiting for payment, predominantly from a debtor finance perspective, that we rely on that invoice and those outstandings to provide value for a debtor finance product. And we then bolt onto that the trade and where applicable equipment. We're not reliant on the business financial performance necessarily. We've got a range of products we've just introduced into the market. Our early pay product, and that's geared so that we can get right down to just being able to fund on the actual invoice itself. So there's very little scrutiny over the business, very little scrutiny on how they've tracked through COVID, and even before that, it's more about whether or not they've got a actual invoice available to them that we can actually provide value against, that they're sitting there waiting 30, 60, 90 days, or may even have a number of books, a number of debtors on their books that they've been waiting for some payment that we might be able to assist with. So it gives them really good opportunity to utilise that to generate that much needed working capital and perhaps assist them as part of the package with that tax debt that we were talking about a bit earlier on. Happy with startup businesses, so those opportunities, those transitions of people are selling up and whatever else, if we expect that a number of business owners may not be able to get out of it, but they may find somebody else that can take a part of their business is profitable and be a part of that. I guess perfect for today, looking at business with challenges and I guess reduced turnovers and debts. Businesses that need a restructure or need a turnaround. We've done this in the past, and obviously we anticipate in order for many businesses to be able to transition through the COVID period, they're going to need some working capital before, perhaps through either a restructure, whether it be through an administration and out the other end through a docker, or a total restructure, depending on how it is. As long as it's done properly and appropriate, it's not seen as something that's been inappropriate. We're keen to look after our existing clients and businesses out there that are in that position that really was got into strife purely and simply because of the changing environment that we all face ourselves in. We're also happy to help and assist where there's limited equity in businesses and business with unique structures and customer arrangements. And we're also happy to work in with other lenders if it's appropriate and there's enough there and they're willing to work with us too. So we've done plenty of those scenarios. So I just want to say that we're out there to facilitate and assist when it comes to businesses finding working capital altogether. Over to the next slide. Just so you're aware, industries that we work in and debtor finance you can pretty much rely on in this particular areas, wholesale trade, transport, logistics, security industry, business services, wet and dry hire, manufacturing, distribution, transport's a big one, recruitment, cleaning and maintenance. So all those industries which are, I guess, reliant on payments dragging out 30, 60, even 90 days. We're able to get in there and help businesses get out of a pickle, but also grow. And there's been some great stories we know about on the positive side where businesses have been able to sort of expand at the present and they've needed our services, especially in the food manufacturing. I think a lot of us are seeing that emerge and grow immensely. Next slide. Next, Shane. So I thought I'd just do a bit of a case study just to sort of give you a bit of an idea of how it can work. In this particular instance, we had a construction business where they performed, and this is quite critical because you often hear data finance can't help in the construction industry. Generally, it is true and very difficult, but often there are completed works that can be looked at. And in this instance, it was one where they were doing a lot of the work on behalf of the builder, and providing labour. They were supplying all the formwork and all the rest of it. They were doing all that work, putting in the concrete, and they vary their way they do their contracts. So these guys work very different. So it's not all stage and it's not progress. So you can actually fund in certain circumstances. They got themselves into a whole world of pain, venturing out into areas that they didn't have expertise. They then had ATR arrears. They had the COVID lockdown on changing their work patterns and changing everything. So we were able to, if you flip to the next slide, Shane, we were able to negotiate with the bank so we can do a deed of priority. We put in a $1.1 million debtor finance facility. And it just meant that the structure, the way we did it, would allow them to free up the working capital in their debtors, inject some much needed money into the business, get themselves on the front foot, continue on with the work, and they've got spare capacity in essence also to actually to access fast cash so they can do other projects and know that they can pay their suppliers and keep on top of things, having addressed some of that legacy issue that was there. So we can move quickly. I think this one only took about 2 or 3 weeks. It all depends on the business nature of the business, and obviously in this one here, we had obviously a bank that was willing to work with us, and in particular look after the client. Next slide, please, Shane. Once again, another example, a logistics business, an absolute perfect example for debtor finance in particular. We're able to really, they had a big break. They had a lucrative 6-month contract. We all know that businesses don't realise that sometimes expansion can come at a cost. We're able to quickly leverage up to their needs in the receivables ledger. They had a large concentration, something we're not too concerned about. We were able to help them. Predominantly, when we look at clients, we look at the value of the people in the business. We look at how they're structured and try and work on a solution that's tailored to them, in particular using their debtors and coming up with a debtor finance package, but also, and not specifically for this client, but we were able to obviously put in the trade and equipment finance. So in this instance, they needed additional trucks. So we're able to do a package where we're able to join both the debtor finance and also put in some equipment finance in areas where often goods are not funded by many of our, I guess, top tier lenders. So people have to spend a fortune on these goods and don't always get the ability to sort of get the equipment that they need. We've actually got products where we'll actually fund older assets, and we'll actually happily do that based on their needs. And in this instance, we're able to get them in some additional trucks and some trailers that were a bit older, but perfectly suitable for the type of business that they were doing, and help them get out of the pickle. Shane, maybe the next slide. I think I already talked about the solution to finance, integrated solution with equipment finance, and we try and find both these packages. And we have, as I said earlier, the trade finance where appropriate, obviously not in this case. Another thing I'd like to highlight, and something we've been working on for many years and we've got in place, it's getting a bit tougher now, and I think many of you might see this. Insurance companies are not as flexible with their trade credit insurance at the moment. We're finding some battles there. Because of the size and scale of what we do, we're able to negotiate better outcomes and make sure that we maintain limits in place and assist our clients to make sure they've got limits and protection, especially in this day and age. But on top of that, it also, as well as it gives us comfort, it really gives them comfort that if something goes wrong, if something's a problem, then they're not got that extra added burden on their business because their debtors can't pay. And this one here was done within 7 days, so we can move extremely quick. Next slide. I think I touched on this earlier on, so I won't bang on about it, but generally they need to have their debtors aging out 30, 60, 90 days at least, so that there's some value in there. And as long as they're waiting on that payment, we can fund up to about 80%, sometimes more in certain circumstances. So that's just a trigger point. If you can see there's a large receivables ledger, there's no other alternative, there's no other assets in the business. Could debtor finance assist your client? Is a question you can ask, and this is the first starting point to look out for something value in their debtors. Next slide. This is a bit of a table, and I think I won't go through it all, but it sort of talks about from a pricing perspective and comparable with traditional bank overdraft and perhaps other products. I mean, the key point here for me is that overdrafts are normally linked to other assets and are capped and quite often maxed out, especially when people actually need to actually utilise it most. The great thing about debtor finance is you can actually scale that up to a limit, basically supported by the value of your debtors. So if you've got a strong debtor book and you've got enough there, then generally that'll be a lot more, unless you've got other ways of securing traditional bank overdrafts. And obviously we know, and we've seen that many times, that a number of businesses either have credit cards or have those short-term loans in place, which can be, if added up over an annual basis, become quite expensive. Putting in a facility like ours will probably achieve what they need, but also reduce a lot of that cost and the potential exposure to that. Next slide, please, Shane. It's very easy to apply. You don't have to get into the detail of this. Often people get concerned with the level of information required. It's relatively complex. For us, it's as simple as making a call, talking about the issues that the particular client may or may not have, and working out whether there's an opportunity there for us to put a facility in place, get the product out there so they can increase their working capital and get through the issues that they've got, or take up the opportunities that may be presented by using either of those three products. So it's as simple as just talking to us, brainstorming. We tell you exactly what information we'll need, and you can pretty much take it from there. You can be as involved or not as you like. Next slide. So that's pretty much it. It's a product that's fairly simple and straightforward. Another bonus is it protects personal assets because you're actually using your debtors and your business facility, so you're not relying on other assets. It can help you with increasing your buying power. It's a bit easier than perhaps the credit processes elsewhere. Our appetite, and I think many others, is that we're out there to engage and try and assist small businesses, and it just helps them with a lot more working capital. That's it. Thanks, Shane. Any questions?
Marvellous. Thanks, Arthur. I think there is some questions down there in the chat box, but I might let you deal with those in
Absolutely.
written format, and we'll move on to the next presenter, which is Nick, who is a partner, my business partner at Dynco. But he's got a lot more experience than me. Some might say better looking, but we won't go into that. And I won't give him I won't give him too much of a wrap up, but Nick's going to talk about alternates, like when things get really tough, the solutions that will help keep you afloat in a really distressed financial position. Once we've gone through all the other speakers that we've had so far that would have helped you if it still is in trouble, then there is alternatives available which don't necessarily result in a formal appointment, and some which do. So with that, I'll hand it over to Nick.
Thanks, Shane.